Hey everyone, thanks for tuning in. I just wanted to check in and talk to you guys about a few things that have come, a few questions that have come my way and meetings I've had over the last few weeks. And just thought I'd record something and send it out, just kind of give you guys some generic information about life insurance, answer some questions like why we need it, what scenarios look like, and how it's used, and how it might benefit you. And feel free to reach out. I've got a link to my calendar um, in the email that I sent out. So feel free to schedule something on my calendar and we can talk more about some of these ideas. But I just wanted to give you some basics here to start. First question, why do you need life insurance? There's a lot of different reasons. I've kind of narrowed it down to four basic ideas. Number one, income replacement. We'll talk a little bit later about distribution strategies and safe withdrawal rates and things like that. The second one is debt reduction. What do you have outstanding on your mortgage, cars, things like that that need to get paid off in case something like this that's tragic happens. Taking care of children. A lot of times people don't think all the way through this. So in the event that a stay-at-home parent passes away, what does that look like for the family? And then the one that we won't talk too much about, but just kind of wanted to hint at for you guys is, you know, how does it fit? How does it fit in terms of estate planning and tax planning strategies? Um, so the idea of a safe withdrawal rate, there's been a lot of different studies done when we talk safe withdrawal rates. That's the idea that how much money you can pull out of an account and out of a portfolio without essentially depleting that portfolio. So the idea is about 3 to 5% each year can be pulled from an account without essentially depleting that within a 30-year period. So when we do, and we're talking financial planning, that's kind of what we're working with. Um, but you know, if you know what your income needs are, and you know what the safe withdrawal rate is, you can essentially do some reverse calculations to figure out, what's a good starting point and what's a minimum that your family would need in order if you were to pass away. Um, so an example here, if you need about $60,000 to live on, and I factored in a working spouse that earning about $30,000 per year, if you wanted to maintain the same lifestyle, you'd need to essentially supplement that $30,000 with $30,000 of withdrawals from a life insurance policy or from an account, essentially. So stands to reason that you need about $600,000 of life insurance if you have a 5% withdrawal rate. Now that 5%, it's debatable on whether or not that's really sustainable. Uh, if you want to be err on the conservative side, you probably want to look at a 3% withdrawal rate. And at a 3% withdrawal rate, you probably need about $1 million of insurance coverage to give you that $30,000 per year as a subsidy for the income of the working spouse that passes away. Now, if we talk about how that looks in terms of income replacement plus some debt reduction at the same time, if we factor a $200,000 mortgage, you'd want to make sure that you have a portion of that insurance policy allocated towards paying off that mortgage. You also probably want to talk through and have an idea of what it would look like to take some time off of work, spend some time with the kids and the family, kind of go through the natural grieving process without having to jump back into work because your budget's too tight. Another factor to consider also is the monthly living expenses that are saved because a mortgage is paid off. As you can see, just from these couple different examples and the things we've been talking about, there are a lot of factors to consider. And it really is, financial planning is a individualized one-on-one type scenario. So what we're talking about today is going to be helpful for you to kind of put things into context. Again, if you want to talk more about it and see how these individualized ideas can, best fit into your situation and what you need, feel free to schedule something on my calendar. Now, the idea of a stay-at-home parent, that is all of the work that's done by this stay-at-home parent does need to be taken care of. Things to consider are childcare expenses, shopping and grocery shopping and shopping for clothes and things like that. daily maintenance on schedules and activities, and soccer games and baseball games, and piano lessons and things like that, that somebody needs to take children to those activities. Laundry, house cleaning, cooking meals, all of this needs to be taken care of. And frankly, to pay a chef and pay a maid and pay a full-time nanny and like all of that would add up. And so just because there's no income generated from this non quote unquote working spouse, there are there's a lot of value that's contributed to the home from that spouse. And so talking through what needs to happen, how long that needs to happen for, and what needs to be taken care of is all part of this planning process as well. So the other schools of thought, some basic schools of thought I've heard a lot of people talk about are this idea that you need to have 10 times your annual income as a benchmark for how much coverage you need. As we've discussed, just in the last few minutes, obviously that number depends on the needs of the family, really. And it's a good place to start. It's a simple place to start, and there's nothing wrong with, putting something in place, right? Because something's better than nothing. But that's just another idea that I know that has been circulating around. And so maybe the 10 times your annual income might work. But you'd be better served having something in place that makes the most sense and takes care of your family. I've seen seen far too many people with not enough insurance coverage, and it's a really difficult situation, both emotionally and financially. The financial side you can take care of, emotional side you can't control, but we do what we can. Obviously, there's a lot to talk about. There's a lot of ideas, a lot of schools of thought out there. Happy to take some time with you and go through these ideas and see how I can help. Thanks for tuning in, and I look forward to talking to you soon.